Very good morning, friends. So I hope you're all doing safe as well as healthy. Well, in this particular month, I started off the aspects of Ind AS 12 with you. And in the very first video, I had outlined a 5-step model in terms of Ind AS 12. And to recall, the step number 1 was in terms of calculating the carrying amount of the asset and liability. And of course, in the next video, I'd also pinpointed that when we apply Ind AS 12, we are basically applying a balance sheet approach, unlike an income statement approach where the IGAAP, that is Accounting Standard 22, was based. Now, as far as the step number 1 is concerned, that means calculating the carrying amount of the asset and liability. This is a pure exercise which is based on, you can say, the other Ind AS. The carrying amount of the asset or liability is purely an exercise which is based on the application of the other Ind AS. Like for example, if you're calculating the value of a PPE, I would apply Ind AS 16. If I'm calculating the carrying amount of inventory, I would apply Ind AS 2. So there is no role in terms of Ind AS 12. In terms of applying the step number 1, there is organizing the carrying amount of the asset and liability. But of course, one of the most crucial steps in terms of Ind AS 12 is getting the tax base of the asset and liability. Today in this particular video, I'm going to talk in terms of the step number 2, which is partially, I'm going to talk in terms of the tax base of an asset. And of course, we're going to subsequently discuss the concept of calculating a tax base of a liability as well. Let's, I think, look at what the para number 7 of Ind AS 12 talks in terms of the tax base of an asset. अनअकैडमी पर मैं शुरू करने जा रहा हूं एक कॉम्प्रिहेंसिव कोर्स ऑन फाइनेंशियल रिपोर्टिंग. ये बैच उन बच्चों के लिए है जो नवंबर 22 और मई 23 का अटेम्प्ट दे रहे हैं. ये बैच कंप्लीट लाइव होगा जिसके अंदर मैं आपके साथ मंडे टू सैटरडे मॉर्निंग में 6 to 8 जुड़ूंगा. तो आपके ऑफिस टाइम से भी कोई क्लैश नहीं करेगा. लेकिन फिर भी यदि आप कोई क्लास मिस कर जाते हैं तो आप इसके अंदर रिकॉर्डेड लेक्चर देख सकते हैं जिस पर आपको अनलिमिटेड एक्सेस मिलता है. इस बैच के अंदर हम सभी इंड एस को इन डेप्थ के अंदर कवर करेंगे जिसके अंदर आपके जितने भी क्वेश्चंस रिवाइज स्टडी मटेरियल में हैं और इसके अलावा आपके पास्ट एग्जामिनेशन क्वेश्चंस, सारे क्वेश्चंस जो आरटीपीज में, मॉक टेस्ट पेपर्स में हैं, कुछ सेलेक्टेड क्वेश्चंस एजुकेशन मटेरियल और साथ में आपके साथ कुछ सेलेक्टेड इंड एस बुलेटिन्स कवर करेंगे. हम इसके अंदर प्रॉपर नोट्स बनाएंगे और इसके अंदर प्रॉपर कवरेज, क्वेश्चंस वगैरह सब कुछ होगा. इस बैच को करने के बाद आपको कुछ भी रेफर करने की आवश्यकता नहीं है. इस बैच का लिंक आपको डिस्क्रिप्शन बॉक्स में मिलेगा और साथ में आपको ये भी बता दूं, आप इस बैच के लिए मेरा कोड इस्तेमाल कर सकते हैं CAKB10. आपको इस पर 10% डिस्काउंट मिलेगा. और 8 जून तक रादर आपको कहूँगा एक ऑफर भी चल रही है जिधर आप 6 मंथ्स या 12 मंथ्स का अगर सब्सक्रिप्शन प्लान करते हैं तो 1 मंथ आपको एक्स्ट्रा मिलेगा और 24 मंथ्स पर आपको 2 मंथ्स एक्स्ट्रा मिलेंगे. तो डिस्क्रिप्शन बॉक्स में आप उस लिंक को क्लिक करके इस ऑफर को भी अवेल कर सकते हैं और मेरे कोड को इस्तेमाल करके डिस्काउंट ऑफर भी ले सकते हैं. तो भाई किस बात का इंतज़ार कर रहे हैं, आइए लेट्स क्रैक इट. Well, if you read the definition, what is given in para number 7, it talks about that the tax base of an asset is the amount that will be deductible for tax purposes against any taxable economic benefits which will flow to the entity when it recovers the carrying amount of the asset. Now, I think let's get one thing very straight. Every asset in the balance sheet certainly gives you economic benefits. That is undoubtful. So the question which you need to put across to yourself is that when the economic benefits will arise, will it be taxable or not? The key agenda of calculating a tax base of the asset is putting across a question to yourself that when the economic benefits will arise from the asset, will the economic benefits be taxable under the Income Tax Act or not? So there would be two situations. The answer is a yes or the answer is a no. Now, if you say yes, it is taxable, then the tax base is supposed to be the future deduction. What is the deduction you will get under the Income Tax Act from that taxable income. So the amount will be taxable. So against the taxable income, what is the amount of deduction we would be able to claim under the Income Tax Act? And the second situation is if those economic benefits are not taxable, then of course there are no future consequences of tax. The tax base and the carrying amount in that case is going to be equal. So if I look at the crux in terms of para number 7, I would put it like this, that when you're calculating the tax base of the asset, put across a question to yourself that when the economic benefits from the asset will arise to the entity, will the income tax come and tax it or not? So we can say the economic benefits are either going to be taxable or they're not going to be taxable. If they're not going to be taxable, the carrying amount and tax base is same. It's equal. But if the income tax people will come and tax it, then the tax base is equal to the future deduction. The deduction which you will get under the Income Tax Act against that economic benefits which is being taxed. So the amount of future deduction becomes a tax base. Well, I think in the next video, we'll also pick up a few examples and understand the concept of this para number 7. We'll take a couple of examples which are given in the standard and illustrate the concept of a tax-based calculation. That's all in this particular video. Thank you for watching. Take care and bye-bye.